Welcome to Assets and Algorithms, the show where we explore the intersection of real estate and technology. My guest here today is Glenn Gonzalez from Obsidian Capital. Thanks for joining me today.
Thanks for having me on your show. I'm excited to be here.
Absolutely, absolutely. I'm excited to have this conversation with you as well, and I'd love to jump right into it. So
Okay.
I'm going to ask you to share a little bit about your role and how it fits into the bigger picture.
Okay. I'm the CEO of Obsidian Capital. We're a small syndication company. I have a business partner named Mike Woodfield who owns half the company, and I own half the company. And we have kind of very similar but dual roles in our industry. We mainly buy apartment complexes, fix them up, stabilize them, increase the revenue where possible, and give good returns to our investors. And then down the road, sell those suckers for a profit, and hopefully everybody's happy. And it's not that simple. It's pretty complicated, but that's the goal anyway, and the objective. And I've got a unique story how I got into this. I actually started in the apartment industry as a maintenance man. So I used to fix apartments, paint them. Later, I was a leasing agent and then a property manager and then later a regional manager and worked for some companies like Equity Residential, which is a big owner operator REIT, and got a great experience there. And worked for a guy named George Marcus. He's part of the Marcus Millchap group. George had a privately held company based out of Palo Alto, California. And I worked in the Pacific Northwest on the asset management side, on the ownership side of things. And I got a lot of experience there too. Anyway, so I went from being a maintenance man to owning about, 7,000 apartments at one point, and then everything in between. It's, every time I think about how we got here, it's exciting and hasn't been easy by any means, but yeah, very grateful. A lot of gratitude in my heart for the journey.
Absolutely. That sounds like a really unique journey. It sounds like you would know the business in and out, and from many different angles, which is awesome. Uh, you mentioned how it sounds simple, but it's really complex in some ways. I'd love to talk to you a little bit about what the typical day looks like for you. What type of technology are you interacting with to simplify your
Yeah.
processes?
Well, gosh, it's evolved over the years, Derek. In the old days, your listeners probably won't even be able to relate to this, but we had ledger cards that we used to keep track of rent and stuff on these actual handwritten ledger cards for tenants. And we evolved to a DOS-based software, called Rent Roll, and then later called RealPage. And now there's several different softwares that you can use, like Entrada or RealPage, AppFolio, Resman. There's a lot of them. So on our daily tasks, to answer your question, we receive a lot of rent every day. So we have set up technology where our residents can log on and have a portal to actually pay rent. And even before they're residents, they can take a tour through a digital tour. They can apply for an apartment and reserve an apartment online, either they could come in and do it in person, but they can also do it online. They pay their rent online. And all this is done through like technology with a lot of security, by the way,
Mhm.
two-step process of authentication and stuff of that nature. But likewise, we also have investors that come and want to buy some deals with us. And
Mhm.
again, we're using technology on a daily basis where we will give them unique access to access the deals that we have, and they can invest online. They can review them. We set up Zoom calls and actually talk to people all over the United States about particular deals that we're buying. And for example, we have a group of doctors that when they're not in surgery, the only time that they can really get on a call with us on their schedules is generally at nighttime, like after
Mhm.
8, 9 o'clock at night. And with the use of technology, we're able to actually walk through, present our I'm so sorry, present our deals to a group and let them interact. They get to review our documents, they get to ask questions, and all of that stuff's kind of exciting because now we could touch more people through technology than we could in the old days where you have to actually go to lunch or go play
Right.
golf,
Mhm.
something like that. And now you could do maybe a little bit of both. So that technology is in every part of our business now. People can submit work orders to get their air conditioner fixed online. It'll generate a work order that goes to the manager and the maintenance supervisors. So it's pretty neat. And we're starting to dab into a little bit of AI, which we
Mhm.
haven't pulled the trigger. One of our challenges in this day is with the economy and employment and stuff is collecting rent or actually collecting delinquent rent from tenants. And with the use of AI, we can actually send them reminders rent is due, or hey, here's a link so you could pay online. We can also take a debit card or a credit card or whatever, and AI will generate that. We could pick when we want to do that: 6 o'clock at night, 7 o'clock, midnight. But the ironic thing is most of these people have like an emergency contact person in the event that something happens to them. It's on their application or when they move in. And a lot of times we can reach out to other people, family members through the AI and actually say, hey, we haven't heard from your brother Derek. His rent is due. Would you mind getting in touch with him, and have him pay his rent? So now it's going, so how irritating would that be if you were on the receiving end? Now, we have not pulled the trigger to do that, but we have gotten proposals from companies that can set that up for us. And
Mhm.
it would all be generated through digital technology. And they say the amount of our delinquent rents will decrease drastically by introducing this tool. So maybe, maybe not.
Awesome, man. That sounds amazing. It sounds like you guys have really intentionally began to source tools and are currently using tools to really help streamline your processes and make your business more simple and easy for all everyone, all of the people that are involved at all levels, from the tenants to the maintenance crew to the ownership as well. And it sounds like it's also going to start increasing your bottom line, so that's great to hear. So with you managing these multifamily properties, I'd love to hear about your insight from your experience having been along this journey. What major shifts are you seeing in the industry right now?
You know, as a whole, and if we're just taking like top down view, I don't know where to begin. Most of our challenges or our changes right now are all economic. And let me give you some examples. For a while, interest rates were super low, right? Cap rates were coming down, and therefore people were paying a lot for these apartment complexes because loans were readily available at a very low interest rate. Investors were wanting to get on, and the cap rates were down. So, rents were on the way up. And some people are like, well, I'm going to start buying some of these on what's called a bridge loan, where they've
Mhm,
got temporary, maybe only a 3 to 4 year window. And you were also saying, I'm going to buy it because it's only, 3% or 3.5% interest, but they would have a variable interest rate.
mhm,
So what happened is now that they've been into it for a couple of years, at 3% is now 7, 8% interest. And when their mortgage payment used to be, call it $50,000 a month, is now $150,000 a month. They can no longer give a distribution to the investors, and the interest rates have gone up. So have the cap rates. So the values have come down. So now
mhm,
when they had an 80% loan to value, the value came down. Now they're like
mhm,
a 90% loan to value, or maybe even 95% loan to value. So when they
mhm,
need to refinance, they can go get a new loan. But now the lender's only given a 60% loan to value, which means with today's higher cap rate, higher interest rate, the values have come down, putting a lot of people in a really tough spot because they can't refinance. And when they do sell, all they can do is barely cover their mortgage, if
mhm.
that. And right now, there's a lot of communities for sale on the market in that position. So
Absolutely.
it's challenging right now.
I 100% agree with that. I think we're seeing the interest rates change. So I'd like to ask you to dive in a little bit too. Based on the market conditions currently, how do you think technology can help or impact businesses' growth or lack of growth?
Yeah. That AI that I was talking about earlier that we're considering implementing, we can really introduce that to multiple properties with this software, and that intelligence can do some work, which potentially could eliminate some payroll overhead. You think about, we're paying people to call the residents, say, hey, it's time to come in. Residents might not come in until in the evening time after they get off work. So now I'm paying overtime to have my staff there to collect rent, whereas I can maybe eliminate part of that expense and pass it through, by using technology. There's other challenges that's not related to technology. I am paying a little more for maintenance supplies. Right?
Mhm,
When I used to buy carpet and paint and other call it smoke detectors and towel bars and the things that I put in apartments, those costs have gone up lately.
Yeah.
So we're feeling the inflation. What it costs us to keep our apartments operating is costing us more, but residents are not getting wage increases like they used to. Some people are not getting raises in pay in certain industries, and a lot of employees are not getting a raise in pay. Our expenses are going up. Rents are not going up, you know, and the cost to keep them maintained and the cost to build them has gone up. So it's an interesting time. And I don't know how technology is going to bail us out of that, to be honest with
Right.
you.
Yeah, I think that that is a good point. You know, payroll is one of the largest expenses for businesses, and I think that AI could help with decreasing payroll by enhancing, you know, some of the work that current workers are able to do and help you grow leaner. As far as, you know, building materials and, you know, renovations, I'm not sure that I've seen that solution. I know there are some new ways that people are building with like 3D modeling and things of that nature using different materials, concrete, to have 3D models build housing. I'm not sure if that's, you know, being rolled out at scale, but
Yeah.
like you said, it's an interesting time.
Like when a resident maybe puts in a work order that says, "Hey, my air conditioning is not working." It could be low on freon. It could need a switch replaced. There's a lot of variables, but I can't use technology to go troubleshoot that or fix it. I need to pay a person that's certified in air conditioning work. And if it needs freon, I don't have a robot or something that can go fix that. It needs to be done by a human being today. It's interesting. Like, where is the technology and the new technology going to be able to help
Hmm.
us in certain aspects? Now, we talked about collecting rent. We even talked about showing apartments can be done virtually, and all of
Right.
that technology is in place and has been in place. Even going into the laundry room, some of our apartment communities have laundry facilities, and they no
Hmm.
longer have to put coins or anything in there, they or cash. I don't have to go collect coins or cash or anything. It's all done digitally. A
Right.
resident can get a card, and they can go, and it's instant, goes to the bank account, and it accesses
Hmm.
the machines. That kind of technology is being used already. So I don't know what's next. I'm curious to see. Am I going to have robots mowing my lawn next?
Yeah.
Maybe I'll have a robot with big old muscles, sitting out there cleaning the swimming pool for me.
It is all in the realm of possibility, but I think for now, what you mentioned is really important, right? Especially in real estate, because it is a human business. You're gonna have to have humans in there at some part, at some portion, and having AI can enhance them, but you're still gonna need them to dive in
Can
what's
only
necessary.
assist, and the software can only assist. It's in this particular industry that we're in, it can't replace. I need my maintenance guys are invaluable, right? And they have to use technology now. I mean, the
Right.
requirements for them to go and charge an air conditioner or recharge it with Freon takes some skills and some
Hmm.
equipment and all of that stuff. Now they can go and do make readies, and they can order supplies online on an iPad now, which is nice,
Hmm.
right? Instead of
Right.
going sitting down and calling and ordering parts, it can all be done electronically, and it can restock our shelves, as they are, making units ready. So there is that technology that helps on the maintenance side. That's a little efficient, but again, like, my guy is still standing in the room and he's looking to see what needs to be broken. He's turning on the
Hmm.
burners on the stove to make sure they all get hot. If it
Hmm.
broke, he'll order one, but he'll replace it. So I don't know how technology is going to fix that, but maybe it
Yeah.
will. You never know. I've seen a lot of changes in my life.
That I can agree on. You know, you just never know. There's been a ton of changes even over the past few years. So you just, you know, expect the unexpected. I'd love to pivot to ask you a little bit about, you know, we talked about what's working well for you and some of the stuff you've implemented, some of the things you're thinking about implementing. I'd love to dive in a little bit to what's been frustrating for you, and what challenges are you looking to solve?
Yeah. You know, when we make big decisions to go acquire a $20 million apartment complex or a $30 million apartment complex, there are so many moving parts on that. Part of it is data. I got to gather data.
Hmm.
So, one of the things that we look at is, our rents going up or down in that market? Our wages going up or down? Does it have a negative population growth or a positive population growth? I also need information on what the competitors are doing in that area, the other apartment complexes. There's so much data, and every one of those is a variable. And Part of our challenge is getting accurate information. There's a lot of third-party reports that we could pull. For example, CoStar tracks a lot of data for us. There are the census information online about, growth. But at the end of the day, is it accurate? Because we're making some very big business decisions based on data.
Mm,
And so part of our challenge too is, do we have the right people on our team with our own employees?
mm,
Are they getting enough education at school, colleges, and other companies they worked at to really contribute in a meaningful way to our business decisions? And that's a challenge, right?
yeah.
Because the ones that are expensive to pay have years and years of experience. The ones that are affordable don't have any experience.
Mm,
Lack of experience may mean we may overlook something, or some box doesn't get checked, or didn't analyze the data correctly because they just didn't have enough experience. There's a
mhm.
challenge, right? It's a real life in our own office challenge.
Absolutely. I think that that's really interesting. Being able to really read that data and make, first of all, understanding and being able to make sure that that data is accurate and reliable, and then being able to analyze and read it properly to be able to apply it properly is the main thing that is going to be important in the future, because we are bombarded with so much information now these days. So that's a great point you made. I
Let me
appreciate
give you
that.
an, let me give you an example, Derek. We'll pull a
Mhm.
report that's online that we pay and we subscribe to for rent and other market conditions. And it may say that, the community in the surrounding area is offering an average of 1 month of free rent to new move-ins, right? And like, oh,
Mhm.
okay. So we go put our budget 1 month of free rent. But then we have this, like, we double check. We actually get in a car and drive down to those competitors and we ask them, hey, how much free rent are you giving? And Derek, they're like, we're giving 6 weeks. I'm like, 6 weeks? I thought you were giving 4 weeks. They're like, no, it's 6 weeks. Like, we haven't given 4 weeks away for like the last 2 or 3 months. I'm like, really? They're like, oh yeah. And in addition to that, we're giving a $700 gift card. What? So now I got to go back to my underwriting model. I need to pull that data we had that was showing 4 weeks of free rent. Now I need to put in my model 6 weeks average of free rent and some other marketing dollars. And all of a sudden my profits are going do
Mhm.
because the data that we had originally put in was not up to date, wasn't accurate. But if you buy or make a big decision based on the data only without double checking it, you may make a bad business decision. And that can apply to any business. It doesn't matter what business you're in. So for your listeners and those that are out there, I would recommend some sort of checks and balances, check, double check, and then verify the data to be accurate where possible. Sometimes that's impossible. Here in the Austin area, Musk has brought Tesla, down there to South Austin, and then I can't just walk in like, hey, Elon, how many people are you going to hire in this area, and how many are going to get laid off? Will you tell me that? And that information is not available. I can talk to some economists and others that will make predictions on behalf of how Tesla's production may or may not be. It's the best we can do. But that's a big impact when you're talking about 4,000 jobs.
Right.
Or Samsung is relocating out to a part of Texas, in Taylor, Texas, and there could be another 4 or 5,000 jobs just in that little market. And that's where you start making big decisions on some
Mhm.
information.
Absolutely. Absolutely. I think that's a great example. You talked a little bit about predictions that analysts they make. You're a professional and an expert in this industry. I'd love to hear about where you'd like to be in 6 to 12 months from now.
I would like to learn how to play golf. I'd like to be on a golf
Mhm.
course someday, and with the ability to hit that little white ball anywhere I want to put it. That would be a great place to be. I hired a golf coach for the first time in my life, and I'm old, but uh, yeah, I'd like to be on a golf course or fishing. Honestly, though, to answer your question, I think growth in my industry is going to be challenging for the next 24 months. I think the wealth is going to be shifted. We recently purchased a 200-unit apartment complex about 3 weeks ago. And unfortunately, we bought that from a group of sellers that were barely able to pay off their mortgage. So they had a
Mhm.
group of investors that went in on that deal and they all got wiped out. They all lost their money. I feel bad
Wow.
for that group of people, but the investors that came in on our deal, we're going to actually solve all the problems that they had, and we're going to get that deal stabilized, and we're going to then sell that, and we will make probably what they were hoping to make those other ones that lost. So I think that in the next 12 to 24 months, we're going to be able to pick up some deals that would be considered in a a challenging asset or, something that needs to be repositioned financially, there's going to be this shift of equity out with the old and in with the new, and there's going to be some tremendous losses it's already started, and it's just going
Mm-hmm.
to continue for the next year or so. I don't think people are going to be paying a lot for market rate stabilized deals because there's more opportunity to buy the broken stuff.
Mm-hmm.
It's just like anything. I don't do stocks or bonds or anything like that or buy shares, but I keep hearing people say buy low, sell high. So same thing with real estate. You could buy low and later sell high. Well, the market's on its way down. So if the people can get out there and go buy it, and there's some smart ones that are doing that. But it's funny because when it's going down, people are like, oh no, I'm not putting my money in there. I'm going to lose it. Well,
Mm-hmm.
some of that money's already been lost by the previous investors. Now is your time to go get it and make it. It's everybody approaches business a little differently. That's our model. We're buying troubled assets and we're closing on them. And we've got a group of investors that are excited about the future because it's gonna hit a curve. It's gonna go back up.
Yeah.
It does that every 10 to 12 years. If you look back, it
Mm-hmm.
did it in 08 and 09, it did it in 14, 15, and here we are 2025. I mean, it's a cycle.
Absolutely. I think that's very insightful of you. I definitely think we're in a downturn. We talked about a ton of the reasons, whether it's interest or inflation or tariffs for building and renovation materials. But if you're able to put that strategy together, like it sounds like you guys have, to come in and buy low and weather that storm to sell high, the opportunity is tremendous. Congratulations on that building. Sounds like
Thank you.
you're welcome. It sounds like you're taking advantage of that opportunity. So I'd love to see you guys there where your goals are in the next 12 to 24 months.
Derek, you're gonna have to put me on the calendar. We're gonna talk next April, and we'll see how we did. Because it'll be stabilized, and I'll be very happy, or I might be like, man, that was painful.
Well, I'm definitely hoping for the happy part, and I definitely appreciate you coming to join me today, Glenn.
Sure.
I'd like to leave this time to let anybody know where they can contact you if they want to reach out, have a
Sure.
conversation with you, or invest in anything like that.
My company is Obsidian Capital Company, and I can be reached at obsidiancapitalco.com. And my name is Glenn with two N's, so you can email me at glenn@obsidiancapitalco.com or my business partner, Mike. Same thing,
Mhm.
Mike at Obsidian Capital Co. And if interested, anybody can read my book. I got this book called Maintenance Man to Millionaire.
Awesome.
Real estate wealth creation for everyday people. Get it on Amazon or just call me. Yeah, I'm out there. I'm on LinkedIn too.
Sounds great. Sounds great. I'll enter some of those links in the show notes. And thank you for joining me again. This has been another episode of Assets and Algorithms.
Thank you, Derek. Have a good day.
You too.